Good morning, traders and investors. My name is Roger Scott, and today is Monday, July 19th. I'm back at my home office. I'll be at my work office in about an hour and a half, but I'm at my home office. I was at Lake Winnipesaukee from Saturday to Saturday, and boy, oh boy, I had an amazing time. If you've never been to New Hampshire, Lake Winnipesaukee, it is heaven on earth. Now, I hate to say I told you so. I mean, I really do hate to say I told you so. But do you remember somebody that looked a lot like me last week talking about COVID increasing, COVID panic, COVID running wild, talking about how the numbers are going again, how this Delta variant is like COVID on steroids? Well, what can I say? It's hitting the market. The Dow's down 365 points. And remember, I told you the Dow, the Nasdaq, and the S&P were extremely vulnerable. S&P down 37 points, Nasdaq down almost 100 points. Not random at all. Dow down 370 points, 99% COVID-related, panic and fear. The bond market, on the other hand, is looking higher. It's now trading above the 50-day moving average, the 200-day moving average. But again, I think it's because of the panic selling. I think it's trying to shake out the weak hands. I'm really not seeing too much upside, and I think this is just a reaction to a bearish market because investors like to put money into the bond market. It's called flight to quality when stocks go down a lot. But quite honestly, if you take away the panic, I don't think there's much downside. There's much upside in the bond market because the Fed has already told us that they're going to slowly move their timeline away from end of 2023 to possibly summer of 2021. So let's not get too ahead of ourselves. I would be selling bonds. I know it's going against us right now, but look at this long-term trend. The long-term trend is down. The long-term trend is not bullish. It's bearish. And we know the Fed is not going to add more buying. They've done enough buying. They're going to limit buying or reduce the accumulation. So that's going to cause bonds to come off. Now, as far as the news of the week, again, we've got earnings. The big factors, financial earnings. More broader companies are going to be reporting this week, and I'll talk about it in my later video. I'll do a couple of videos today or maybe tomorrow, but there'll be a lot of videos because we've got a lot of stuff going on. But we've got housing market, we've got housing starts. Don't expect any miracles there. Even if the number's slightly off, it's been really strong. The big report is going to be the petroleum status report. I'll talk about OPEC in a minute, and the big report is going to be jobless claims, the National Activity Index, leading indicator, and existing home sales. The PMI is not going to be that big. Ultimately, there's not a lot of news this week, and with summer running wild, with earnings on the table, and with this COVID, I think that's going to overshadow earnings unless there's something deeply off. Now, let's talk about the global economy. As you can see here, Nasdaq's now down 100 points. Things are not getting any better. But I told you about this. I hate to say I told you so, but I told you this was going to happen. I told you how there's a vulnerability in large caps. I explained to you that COVID is running wild. I explained to you that it would only take a matter of days for the S&P, which I'll show you right now, to start looking like the equal-weighted S&P. Matter of fact, we shorted both the Nasdaq and the S&P last week on some of our programs. So this should not be a surprise. This should be closer to the 50-day moving average. Let me show you this. You see how far this is away from the 50-day moving average? If you strip away all the market capitalization from the S&P, let me show you what it looks like. That's what the S&P really looks like. That's really the S&P right now. That's when you take away all the market cap. This is the equal-weighted S&P. So the S&P doesn't look anything like the Nasdaq does right now because those large caps are completely fooling everybody and distorting the view. This Nasdaq should be right here. I'm not kidding. Matter of fact, let me see if I could do the composite. The Nasdaq. I can't. Let me do it this way. Let me show you this. You guys got to see this for your own eyes. It's one thing me talking about it, but it's another thing me showing it to you. And I'm so glad I'm at home because my computer here is so fast. Look at the number of stocks in the Nasdaq 100, the top Nasdaq stocks trading above the 50-day moving average, 67%. Now I'm going to switch to Nasdaq Composite. Are you ready? Hold your breath. 33% above the 50-day moving average. 67%. 33%. So the market does not look like you think it does. Matter of fact, let's see if we could do a chart. I think we can. Let's see here. Yeah, this is what the composite looks like. It's getting a lot closer down. So again, the number of stocks the S&P, if you really want to see the S&P, or was it RSM? Was it RSM? I think it was RSM. I just did it a few minutes ago. Let me go back here. See, this is what happens when you get me out of my house for a week. I completely start going crazy and forgetting ticker symbols, especially ticker symbols that I just threw on the board a minute ago. Let's see here. There we go. RSP. This is really what the Nasdaq looks like. It's not up here. It's up here. So you've got to be very, 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 very cautious. And again, sectors. What happens when COVID hits? Where do you want to put your money? Healthcare sector. Healthcare, inflation doesn't matter. COVID does healthcare stocks. That's where people put their money when COVID hits. So healthcare sector is looking really good right now. Look, it's bucking the trend. It's trading completely above the 50-day moving average. You wouldn't even know there's a downside. It's down 0.54. Let's see what the S&P's down right now. 0.89. Let's look at what tech is down right now. Let's look at the QQQ. 0.73. Healthcare. Look at this. 0.54, a lot less. So what do? We look at healthcare stocks when there's a medical emergency in the world, right? GMED Global, what do they do? Medical devices, 1-year return, 69%. And it's an $8 million stock, so it's not going to have that big market cap. And again, medical stocks. It's not doing that bad. It's a strong buy. Got a great profile, 1-year return. Look at 5-year return. Look at the earnings. Everything is solid. Look at last quarter income. It looks very, very solid. And earnings estimates, let's take a look. Look at that. Surprises, 4 quarters in a row. Profit target 82. I would say a profit target of 85 right now in the short term. Probably right around here over the next 12 weeks. Next one, Charles River Laboratories. What did they do? Healthcare. Provides essential products and services to help pharmaceuticals and biotech companies, government agencies. Government, you know how much money government is going to put into COVID research? 101%. Market cap, $20 billion. It's a bigger stock. Charles River Laboratories. Let's look at it. Look at this. Does this look like it's being impacted by COVID at all, like the rest of the market? No. Nice congestion. Easily can go to the 400 level over the next 12 weeks. And last, ALXN. Pharma. Hitting the 50-day moving average. RSI, definitely not overbought, closer to the oversold territory. I like this on its pullback. Now, before I let you go, I've got something important, vital, and timely for you. And I told you this was going to happen last week. I warned you. I told you that there's a vulnerability in large caps. I told you that COVID is running amok. Folks, I don't have I do have a crystal ball actually right there, but we don't talk about that. Folks, the stock market, it can be unpredictable, especially with today's sagging momentum levels and inflationary pressure. And that's why you need a trading strategy that will net you consistent returns year after year, no matter what life throws your way. And that's where Trophy Trades comes in and helps. This stress-free, and I'll repeat again, stress-free trading strategy allows you, and I mean you, to capture more of a stock's gain without leaving large profits on the table. And it even works in the most turbulent of markets. For a limited time, you can learn the strategy that the 10-time trading champion Chuck Hughes used to profit from 97% of the positions that he took over the past 2 years. Can you imagine 97% documented profits in the last 2 years? Don't pass this opportunity to learn Chuck's trading secrets. Chuck is the real deal. He's a 10-time heavyweight trading champion. You should see his trophies. And that's why it's called Trophy Trades. Don't pass this opportunity. Click on the link below to find out more about Chuck's secret and how you can use it to maximize your portfolio, gain an unfair advantage in this market, and learn to be a trader with a 97% accuracy over the last 2 years like Chuck has. Click the link below. You don't want to miss out Chuck. This guy is serious business, and he'll help you gain an unfair advantage in the market. And make sure to like this video, subscribe to this channel if you're watching on YouTube, stay ahead of the market by being the first to be notified when I post new videos for you, right? I mean, who else told you about the market vulnerability and this COVID that it's going to run amok on the market? I sure did all last week and the week before. gave you heads up. I'll talk to you guys later. Have a great week, and you'll be seeing me quite a bit this week. Bye.